Hey guys, welcome back to our channel. I'm Court.
And I'm Trey.
So sorry for the wait. We took a little hiatus, got our lives together, but we're back. And we're going to be giving you guys content on a consistent basis, so stay tuned. We wanted to do this video for you guys to help you better understand credit and learn how we build and maintain our credit.
Yep. So we'll just give you personal experiences and use it as a guide if you'd like.
So my experience with credit when I was a teenager getting ready to go to college, my mom always said, you're going to get tons of mail. They're going to be asking you to sign up for a credit card. Don't do it. It's, don't end up like me, fallen victim. It's not your money, XYZ. So throughout college, I was shooketh. I definitely wasn't even thinking about getting credit. I didn't even understand what credit meant as a whole, not just credit card, but just how to build your credit, what is credit, all of that good stuff.
And then I guess I was the other end of the spectrum. My mother was very open about finances with my sister and I. And our younger sisters, we talked about saving, how to build credit, and we tried to model that from teenagers into our young adulthood, and hopefully we can pass on some of that info to you today. So overall, I just want to give you a basis of what credit is. I kind of like to describe it as the trust that one person can say, if I give you money or a certain resource, you will pay it back to me. That credit is often linked to an actual score. It ranges as low as 300 to as high as 850. I won't go into the details about Equifax versus TransUnion or Experian. There is something called Google. Check it out. But in reference to that, it's essentially the lower the credit score you have, the more you're going to pay for any resource or money that you ask someone else for. The thing I like to put it to is like a car. So you might want to buy a $10,000 car and you have a very low credit score, so they give you a high interest rate. Well, you might end up paying $20,000 for that $10,000 car. Whereas if you've been very responsible, you built up that credit, oh, I trust you to give me my money back on time every month, so I'll give you a low interest rate. You only pay $12,000 for a $10,000 car. That's pretty excellent in my book. So if you think about it that way, it just shows your worthiness to pay something back. There are a couple different factors that go into credit and your credit score as a whole. The first would be your payment history. So do you pay your bills on time? How much credit you're using. If you have $10,000 on a credit card, the limit, how much are you using of that? Are you using $5,000? 50%? Kind of high. You might want to bring it down. They say you should use like a max of 30% of your credit, so just keep it as low as possible. The credit history length. How long have you had all those different lines of credit? Whether it's revolving credit, meaning those credit cards, or is it that installment debt like student loans or your mortgage? Like how long you've had that, and then that credit mix between the credit cards and the card notes and all those different things. What kind of mix do you have? You should try to get a balance between the types of credit. And then finally, those new inquiries, we hear about soft or hard hits. Are you applying for new credit? That might tell me you might not be as responsible as you need to be because you need some help. So managing those different factors lead up to that credit score and your worthiness for me to loan you some money. Does that make sense? Hopefully. So how do we manage our credit?
We both pay our revolving and installment debt on time and in full monthly. We always travel on cash. So anytime we're not traveling, we use that excess cash to put towards our
installment debt. And it's funny, like they say, an extra payment per year towards your mortgage can shorten a 30-year mortgage from 30 years you're paying to 26 years. So that's what we're aiming for. And finally, just some quick tips that we think you should and should not do, or what we pretty much do and don't.
Don't apply for multiple lines of credit at one time. That's just a no-go and your credit score will go down. Do always pay your different forms of credit on time and in full. If it's not gonna be in full and you're carrying over a balance, pay at least the minimum payment, and if you have a little extra, put a little extra towards it.
Don't tell our homegirl Sally Mae that she'll get her money when you have it. I get it. It's a lot. You know, you thought, oh, this is a scam. I paid all this money for the student loan. But guess what? We have it, so let's just go ahead and take care of it. So always pay your student loan in full and on time every month. And when you have a little extra money, target those high interest loans so you can pay as little as possible and pay it off as fast as possible. And finally, try not to travel on credit, because you'll eventually just pay more for the trip than you really would have because of that interest that's associated with the credit card. Unless it's interest free, then by all means, split it up across the months that you feel appropriate to maintain no interest on that trip you wanted. Do always use your credit cards for your trips if they have positive incentives. So if there's a 5% cash back, if you get points towards flights, use it, but just make sure you pay it in full, because you don't want to carry balances, and especially not over that 30% range. And if it's not paid on time, again, a negative credit mark towards you.
And please, this may sound super cheesy, but use it, but don't abuse it.
Right. We live in a capitalist society, so credit is the way that we build wealth. Just do it the right way. Thanks for watching.
If you guys have any comments, or if you'd like to ask us any additional questions, comment down below. And as always, don't forget to hit the subscribe button and see what we have next.
Like, share, comment.
Bye,
Bye.
guys.